The US Federal Reserve cutting interest rates for the first time in more than 4 years, a major shift after spending the past 2 years fighting inflation. Tell us more.
The US Central Bank lowered its benchmark rate by half a percentage point, a significant amount. The last time the Fed cut interest rates was back in March of 2020, as it tried to shore up the economy during COVID. But as the economy went into overdrive post-pandemic and the labour market faced a shortage, it rapidly raised rates to a 20-year high and kept it there for over a year. The Fed also now signalled more cuts to come and that the rate could come down to 3.5% by the end of next year. While inflation has come down significantly from its 2022 peak of 9.1%, the job market has been showing signs of slowing. Let's take a listen to the Fed's chairman.
As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance. And we are attentive to the risks to both sides of our dual mandate. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment.
The last few years have been challenging for businesses around the world, so what's keeping corporate bosses awake at night these days? Yuka.
Well, Mark, from geopolitical tensions to climate change to the race to get on top of artificial intelligence, there are many issues surrounding the business world that leaders need to respond and adapt to. Accounting giant KPMG has just released its annual survey of top CEOs with more than 1,300 corporate leaders sharing their views. It's the 10th edition, and compared to when the survey started, CEO confidence in the global economy's growth prospects for the next 3 years has declined significantly, with 72% saying they're confident compared with 93% back in 2015. Now, to discuss more, let's bring in Regina Mayor, Global Head of Clients and Markets at KPMG International. Thank you for joining us, Regina.
Thank you for having me.
Now, these are tough times for corporate leaders. What's keeping them awake at night the most?
Well, one of the things we found in the 10-year retrospective is that CEOs are really focused on the long-term sustainability of their companies against the backdrop of ever-growing uncertainty and volatility, as you well pointed out. Interestingly, this year, supply chain and operational risks edged out geopolitical risk as top of mind for CEOs. But when you think about it, supply chain operability and running your business are manifestations of the challenges that corporations have when they confront geopolitical risk. So how are they going to shore up the companies and focus on that long-term sustainability? They're betting big on AI and on talent.
Now, you mentioned AI. Now, businesses are clearly in a race to embrace AI. The technology has become mainstream, we can say, but brought with it some worries as well. We know that ChatGPT can hallucinate, and some workers worry that AI can replace them in their workplaces. What's the view on this among big companies?
Well, we say 64% of our CEO respondents say they're going to bet big and it's a top investment priority, but they also recognize that they don't necessarily have the skills in the workforce to be able to take advantage of the technology as well as manage against the risks, with only 38% believing that they have the capabilities to take advantage of the technology today. So they're also investing in talent, with 80% saying that they will invest in long-term skill development and in lifelong learning, because we need humans as the co-pilot for AI to be successful.
So there's clearly there's some work to be done on brushing up those skills to cope and work with AI among workers. Now, speaking of workers and jobs, your survey also shows a significant increase in the number of CEOs expecting a full return to office in the next 3 years compared to last year. Amazon recently announced an end to remote working. Why is this necessary? Hasn't the world of work evolved since COVID to embrace the hybrid form of working?
Well, definitely we've embraced the hybrid form of working, but what CEOs are realizing is talent and access to talent is a fundamental competitive differentiator, and you can't really grow your talent when you only are working remote. So we did see in the survey a big 20+% jump in CEOs that are going to require more face-to-face time in the offices. That doesn't mean 5 days a week necessarily, but that's a big jump from last year's 62%. But it is because you can't inculcate culture, you can't build the skills that you need, you can't leverage the technologies without some form of face-to-face gathering. That's why we see more of an emphasis on return to work in this year's survey.
Are the bosses also seeing wage growth going forward?
Absolutely. I think we're finally seeing wage growth that's keeping pace or even ahead of inflation in some of the latest results that I was looking at this morning. And then we're also focusing on things that are important for society. So ESG was another topic that showed up in the survey. In 2015, it wasn't even a top risk. In 2024, it's at the top table of risks. And 66% of CEOs say they don't believe that their narrative will necessarily stand up to external scrutiny, so they know how hard it is to continue to drive that. But 76% said that they would divest of a profitable business if it had reputational risk. So I think those are some of the other things that are coming from society at large that are finding its way into the corporate boardroom.
Yeah, I mean, as you just mentioned, sustainability, of course, is another top agenda. And as you said, many big companies are under pressure to do more to tackle, social issues as well as climate change and move away from fossil fuels. But there's also huge profit at stake. Has the attitude of corporate leaders towards environmental issues changed significantly over the past decade or so?
For sure, in terms of the last decade, we have seen a big change. As I said, it wasn't even a top risk in 2015, and now it's definitely a big concern. It's the challenge is how to get there. And I think that's also why supply chain and operational risks show up as top risks, because how one actually decarbonizes the entire supply chain is incredibly tricky. And that requires lots of different changes in fuel mixes, transport modes, supplier ecosystems. And that's where you're seeing the complexity of how do you respond to climate challenges in a way that retains earnings and grows opportunity for your shareholders and your people, but is also responsive to the needs of the environment and to the external regulators that are watching more and more closely what these companies are delivering. So it's a whole tricky set of factors that they're balancing.
Tricky set of factors. Indeed. Regina Mayor from KPMG, thank you so much for joining us on France 24.
Thank you.
And that's it for business.
Absolutely fascinating. Yuka, thank you very much indeed. Great to see you. Yuka Royer there with The Business.